Hello traders, you're welcome back to the Forex Geek channel. Have you ever struggled with trend confirmation? Do you find yourself second guessing your entries and exits? Well, in this video, I'm just going to be breaking down one of the most visually powerful indicators in trading, and that is the rainbow moving average. All right, the rainbow moving average. Now, this tool helps you filter out noise, spot strong trends, and time your trades with better accuracy. Okay, so stick around, smash that like button, and if you're new here, don't forget to hit that subscribe button for more expert trading strategies. So what exactly is the rainbow moving average? It's a combination of multiple moving averages, as we can see here on the chart, stacked together, creating a layered effect that visually represents the strength and direction of a trend. All right. Now, each line in the rainbow moving average represents a different moving average length. The shorter term moving averages react quickly to price changes, while the longer term moving averages smooth out the noise. Okay. So some of the key benefits of this rainbow moving average include clear trend direction. When the lines are stacked neatly and flowing in one direction, it means that the trend is strong. All right. And this indicator can also help to identify reversals early. When the shorter term moving averages start crossing the longer term moving averages, it signals potential changes, right? Change in trend direction. Okay. And then this indicator helps to reduce noise. It helps to filter out small price fluctuations and keeps you focused on the bigger picture. Now that we understand what the rainbow moving average is, let us talk about how to actually use it in trading. So here are three powerful ways to apply this indicator. The first is identifying strong trends. Okay, when the moving averages are stacked in order with the shortest at the top and the longest at the bottom, this confirms a strong uptrend. All right, like what we can see here, right? When you have um the shorter term moving averages at the top and the longer term at the bottom, it shows, okay, let's use this as an example because this one is flowing in a better, there is more spacing within the moving averages. So we can see that the shorter term moving averages were on top and the longer term moving averages were at the bottom, showing a smooth flow in the trend. Okay, now the wider the spacing between the lines, the stronger the trend is. As you can see, this is quite obvious here that we had wider spacing. You can see that the trend was quite strong compared to here when we had lower spacing. You can see around here we had lower spacing, and you can see that the trend was not that strong, right? So if you look at both scenarios, you're going to see the difference. Then in a downtrend, the reverse is just the case, right? The reverse is the case in a downtrend. Shorter term moving averages are at the bottom, while the longer term moving averages are at the top. Okay, so if the moving averages start to converge or cross, it could indicate the trend is weakening. All right, now you can also use this indicator to spot trend reversals. Reversals happen when the short term moving averages cross the longer term one. So if the price moves from below to above the entire rainbow moving average, that's a potential bullish reversal. If the price drops below the rainbow moving average, like what we have here, then it could be a bearish shift. All right, so to avoid false signals, always look for confirmation like a retest of the moving averages or additional indicators. Okay, it's important to always get your confirmations. All right, and then finally, let's talk about trade entries and exits. One of the best ways to use the rainbow moving average is for pullback entries. Okay, when price retraces and touches the moving averages but stays within the trend structure, it often presents a great trade entry opportunity. All right, often presents a great trade entry opportunity. Okay, so on the flip side, if price break through the entire rainbow structure and closes, that is, if it's a bullish breakout, if it closes above it, it could be a signal to exit your sell trade, right? But if you are in a buy trade and the price, candlestick breaks below the moving averages, then it could be a signal to exit your buy trade, right? If you are in a buy trade and the price breaks below, it might be a signal to exit your buy. But if you are in a sell trade and the price breaks above, it could be a signal to exit your sell. Now, before you go applying the rainbow moving average to every trade, let's talk about some common mistakes that traders make. The first is ignoring market conditions. Okay, the rainbow moving average works best in trending markets. If you are in a choppy sideways market, you will get a lot of false signals. Okay. Secondly, do not make the mistake of using this indicator in isolation. Okay, this indicator works even better when paired with support and resistance levels, RSI or volume indicators. Basically, the more indicators that you use for confirmation, the higher the chance of having a high probability trade. But it doesn't mean that you're going to clog your charts with a lot of indicators, right? You can just use a few for the purpose of confirmation. Okay, remember that it's always important to look for confluence. All right, confluence is very important, and do not make the mistake of entering too late. If you are chasing a move after the rainbow moving average has already expanded significantly, you might be entering late. So always wait for a pullback before jumping in. If you are in a sell trend, if a sell trend has begun, wait for a pullback to the moving averages before entering. Like if you want to enter a sell, there should be a pullback and then continuation that you can enter your sell. There should be a pullback to the moving averages and a continuation that you enter your sell. If it's a buy trade, in a buy trend, you wait for a pullback. Okay, let's see if we can find another example, right? Okay, so this is a buy trend, right? So you wait for a pullback to the moving averages, preferably the longer term moving averages. Okay, preferably the longer term. Then when price pulls back to the longer term moving average, you can enter your buy, and then if you want to stack more trades, you can wait for another pullback to at a higher low, of course, right? Because in a bullish trend, you're gonna be seeing higher highs and higher lows, right? So your pullback should always be at higher lows. That is for the bullish trend. If it's for the sell trend, your pullback should always be at lower highs, right? At lower highs. Okay, but just ensure that you wait for a pullback before jumping into the trade. All right, traders, that is a wrap on this breakdown of the rainbow moving average strategy. Now you know how to use it to confirm trends, spot reversals, and time your entries and exits. Which part of this strategy are you most excited to test? Let me know in the comments. If you got value from this video, don't forget to hit that like button and subscribe for more advanced trading strategies. Turn on notifications so you never miss an update. In the meantime, thank you for watching and happy trading.